My name's Hugh Van Steenis, and I'm here with Sarah Williamson, the founding CEO of Focusing Capital on the Long Term. We've just finished a fascinating debate talking about the merits of long-termism and how we can incentivize long-termism through private sector incentives. So Sarah, you've done a lot of great work about the challenges of corporate or investor short-termism. How big a problem do you really think this is?
So we think this is a very big problem. We have done some research that was published this winter with McKinsey & Company, and it took a look at companies that either displayed long-term behavior or short-term behavior on a number of financial metrics. And the short-term companies underperformed the longer-term companies quite substantially on a number of different measures over a reasonable period of time. And the sum of that, if those companies could have behaved like the long-term companies, the impact in the U.S. economy alone would have been an additional 5 million jobs, $1 trillion of asset wealth, and a 1% of GDP. So we think that the lost opportunity of companies behaving in a short-term manner is an important driver of the economy that we need to correct.
One of the most interesting issues for me on the panel was the issue about incentives along the investment chain, starting obviously first and foremost with the asset owner. What are your perspectives of how we can address the problem of incentives?
So most asset owners want to be long-term. They have long-term liabilities, perhaps they're managing money for the next generation, whatever that may be. And they often say they turn to the asset managers, and then the asset managers act short-term. The asset managers, on the other hand, often say they're very long-term. They have a long-term investment philosophy and approach, but they're worried that the asset owner will fire them if they underperform for a couple of quarters. So one of the things that we're working on in depth is what is the mandate that an asset owner gives an asset manager? And what are the details of that in terms of the incentives around fees, but also contract terms, reporting, all the things that set that relationship, because we think that by tweaking those terms and conditions, we can create much more of a long-term relationship and a much longer-term incentive for the asset manager, who will then act in a way that is more in accordance with what the asset owner is trying to accomplish.
Well, look, Sarah, thank you so much for coming along today. I thought it was a truly fascinating debate.
Hugh, thank you so much, and thank you to Schroders for hosting this event. We really appreciate it.